Are you wondering, how do you enter into QuickBooks money that you're moving between different entities, what we call intercompany transactions? You are in the right place. Hi, I'm Kampfer, and I love to help business owners and bookkeepers simplify and create confidence with QuickBooks. And we create tips and tricks here on a regular basis to help make that easier. So I often get asked, like, I need to move money because of cash flow, or we paid over here, but it really was owed over here. And if that is what you're looking for, you're in the right place. That's exactly what this video is about. Now, I want to point out one thing. This is the part 2 to these videos. I originally created a video and it was all about how to set up and start entering in when you move money around. So go up above or down below and click on that link so you can get it set up. This is part 2 on how do you handle it at the end of the year. Okay, so at the end of the year, after you've been entering all these transactions that you're going to learn how to enter, how do you close it out? Because one of the companies is going to have an accounts receivable, meaning they are owed the money, and one is going to have a liability, meaning they owe the money. And how do we handle that part? So this is part 2. Don't forget to check out part 1 if you are looking for it. So come look over my shoulder and we will jump into QuickBooks. All right, so in my original example, we had 2 separate company files, right? So it could be the bigger company, the little company, different LLCs, depending on your business model. And one company at the end will owe another company, and it can move back and forth. Sometimes big company pays little company, sometimes little company pays for big company. Whatever it is for your example, it doesn't matter. But what does matter is how do we close it out at the end of the year? So here are my 2 examples that I had. So this one, the purple one, is going to be Larry's Landscaping in this example. How we set it up per the first video is intercompany, and then confidence with QuickBooks is where the money came from initially. Okay, so what do we do now? You'll notice one company has a negative where the other company has a positive. They should be the exact same amounts because we're tracking the transactions. This is just money moving from one to the other, maybe to cover payroll, maybe to cover some expenses. It doesn't really matter. And let's say at the end, you're like, we are not going to actually reimburse. We're not going to write. So in this example, the purple one, or Larry's company, should write a check back to the Confidence with QuickBooks company or my training file for the money they owe. But let's say that's not going to happen. What we would want to do, and you can always check with your tax professional, is close these out at the end of the year. So the company that is actually negative, which you'll see here, that company owes the other company. Just know that if you see a negative, it's owes someone else, okay? So what you can do is you come in here under your list in your chart of accounts, which is where I'm at right now, and you're gonna go down to the bottom and you're gonna create new. And if it's a negative, it's actually gonna be a liability. And it depends, are they ever gonna pay that money back or not? That's a big question to ask. If you don't know, I would do it as a long-term liability, okay? And click continue. That means more than a year. And you are going to enter in the information that they owe this company. You're going to add in the name. And the name that you're going to want to add is, in this example, Confidence with QuickBooks. Let me fix my typo. If it won't all fit because it's too long, you might have to abbreviate it. So I'll do CWQB for Confidence QuickBooks, and I'll put notes payable. What that means is that Larry owes Confidence with QuickBooks. So whenever you're thinking about this, you need to think about if it's an asset or a liability, who owes the money? And think of, it's hard sometimes because we think of ourselves as all one, but you're really 2 different pieces. So you want to be who owes the money, who owes the money, and who's owed the money. 2 different things. So who owes the money, it's going to be a liability. Who's owed the money is going to be an asset, but it's going to be a notes receivable. I'll show you that in a minute. So we're going to go ahead and create that account. The reason we're doing this is because at the end of the year, we want to clean up our transactions. When we set this up as an asset initially, at the end of the year, a tax professional is going to be like, why is this account negative? For proper accounting, it needs to be moved to a liability if it's negative because it's owed, okay? So we're going to go in, and there's 2 ways to do it. You can go in and do a journal entry. Let's say it's the end of the year, and we're going to do this on December 31st, okay? Because you want to do it at the end of the year, depending on whatever, if you're a fiscal or a calendar year. It's an asset account, but it's negative. So you're going to go in and you're going to pick the correct count. If it's a negative, it's going to be a debit. So $2,000. This is a little advanced. That's why we had the 2-part on this. And then this part's going to be what? What do you think the other side of it's going to be? Yes, you're right. It's the account we created together, the notes payable. And you can choose to enter in a memo. You can check with your tax professional, and it could be like closing out the Intercompany Transactions for 2023 or whatever year it's for that you're doing your example, okay? And then you can always put this in both places. Now I'm in the accountant's version, so I have an adjusting entry. I'm going to take that off and I'll just do it like this. So what that does is it's going to zero out, because right now it's negative. With a debit, it will increase it and move it to a liability, which is actually a credit-based account, okay? So I'll click Save and Close, and you'll see it's now zeroed out so that we can start it over again the next year. And if we looked at our balance sheet, we would see it's moved to the correct place. And see, now it's not a negative anymore because it is truly a liability, and that's where it belongs. If you double click on either of these transactions, I told you there's two ways you can do it. The other way to enter it is just manually in here. So I'm actually going to delete this, the first half of the transaction. Let's say that we never did that. Actually, yes, I've already copied it, so we'll be fine. Okay, so I'm going to delete it. I'm going to show you the second way to do it. So I deleted it. We'll go back in and see there's $2,000. If you're not great at journal entries or they make you uncomfortable, you can actually just double click from the chart of accounts. And in here, you're going to pick December 31st, if that's the end of your year. And then over here, you'll see there's a payment. So the opposite's going to have to happen, a deposit, right? Because we see that it's negative. And then here you can choose the account. So you always have to create the account first. We're going to go up to our liabilities. And then we're going to put in our note. Okay. And then we're going to click record. This will do the exact same thing. Even though we did it in one account because we chose the other account here, if we go down, you'll notice it's still sitting there as well. Okay, so you can either do it with a journal entry or you can do it the other way. It's totally up to you. If you do it through journal entry, do it through journal entry. If you do it this way, it does it as a transfer. It doesn't matter which way you do it. It's whatever works for you. Now that you've handled the first account, now we need to go handle the other one. So this is how you handle it if it was a negative to begin with. Now we're going to go in and we're going to say, what if it was a positive? It's a receivable. It's an asset. So Larry owes the Candus QuickBooks company money. How do we do that? We're going to go down here to account, click on new. We're going to choose, you can come in here and you can see like accounts receivable. No. Other asset, you could choose to do that, but usually other asset's going to be paid off within a year. Other current asset, I should say. And then other asset is going to be anything like goodwill, long-term notes receivable, which is exactly what we're looking for. If you click on fixed assets, that's usually building and land. So I would recommend that you choose other asset. Okay. That's one of the things I love about this little screen right here is it gives you examples of exactly what's happening. So we're going to go ahead and click continue. So I'm going to type in Larry's landscaping, but because it's long, I can't put it all in there. So you might have to abbreviate it depending on the name that you have. And then I put a little dash and then notes receivable. Okay, notes receivable. And that is going to set up your asset. And we're going to go ahead and save and close. So on one, we did in Larry's, we did Candus QuickBooks notes payable. In Candus QuickBooks, we did Larry's landscape notes receivable because that's where it's owed. And you'll notice it's zero. So then we're going to go in. You can use the same strategy. So you can come here. You can either do a journal entry. Same thing. So we're going to enter in our date. Perfect. We can take our adjustment off. Now, if it's a positive, we have to go the exact opposite. So we're going to start with Larry's notes receivable. We're going to put it in for the amount that is owed. And then we're going to credit the original Larry's landscape / bank account, but where we were keeping track of the intercompany transactions. Why? Because it was a positive number. So it has to be a credit. And because it's an asset, it would be a debit. So you'll do the exact opposite here. Now you could do your credit first on the first line, but I typically like to do debits and then credits. So that's why I teach it that way. Be consistent with whatever you choose to do. And we'll click save and close and look at it. Now, this is zero. And when we go down to our notes receivable, we'll see $2,000. So when we look at the balance sheet, so if we go under reports, company and financial, balance sheet, standard, and you look at this for December 31st, 23, if you're inside the Confidence of QuickBooks, you'll go down to your assets. and you'll see your notes receivable. And when you go and you look at your balance sheet in the other, let me minimize that. I'll find it for you. There it is. You come in here. If you look at your balance sheet, they should always match. As long as you're keeping every transaction entered on both sides, they will always be the same. Okay. You'll come in here as far as dollar amount anyways. Your notes payable is $2,000. If you're using the bank account and there's a dollar amount in there, you always want to verify that those are the same as well. Let me know if this helped you. Don't forget, if you're needing the very beginning steps, that you watch part 1. And if you're new here, don't forget to subscribe and give this video a thumbs up and leave a comment. Let me know, did this help you clean up at the end of the year all of your transactions? And did it make it super simple for you? If you are looking for more training on how to use QuickBooks from the beginning to make sure you're using it properly, you may want to check out Confidence with QuickBooks or attend my next Customizing QuickBooks workshop. You can find out all of the details above or below. Have a nice day. Thank you for being part of my community. See you later. Bye.